We aim to generate positive returns in all market conditions with very low correlations with broader asset classes. So the objectives of the BMO market neutral fund are to generate 7% excess return over the risk-free rate. And we think that we need about 10% of volatility to achieve that 7% excess return. I think what makes this product unique is that, first of all, it's a purely systematic approach. The other element is that we use a methodology which we call our true styles methodology. A style or a factor is very simple, a quantifiable characteristic of a security. And people are pretty familiar with things like value or momentum. We have 5 characteristics that we target in that way. True value, true momentum, true size, low volatility, and something we call true GARP, where GARP stands for growth at a reasonable price, and where the GARP block is very much a combination of valuation, growth, and quality. So it's really to get an alternative for bonds or equities, or as a matter of fact, for something in liquid alternatives space, where the fees tend to be pretty high. But what we can say with a high degree of confidence is that it will lower the risk in the portfolio for sure, because of the nice and low correlations the strategy has with both bonds, high quality bonds, as well as with equities. So our BMO Market Neutral Fund uses this true style approach, which I think is quite unique in the market. I don't know anybody else who's using it. I think the first distinguishing feature is that we don't try to time the styles. And there are quite a few people out there that try to time the styles. So say, oh, we'll go long, we'll go overweight value now, or we'll go underweight momentum now. We don't think we need to do that. So we have a very stable allocation to the components we're targeting, and that also, as a result, of course, reduces chances of being wrong in the wrong style at the wrong time quite significantly. When we look at the life of the strategy, and of course we have live track record in the product in our UK-based vehicle. So if we look at the period from mid-2015 to February 2016, actually MSCI World as a representation of equities went down 17%. So that's not a small drawdown. So the strategy, what we're going to be running in this BMO Market Neutral Fund returned 14% over that same period. So the market neutrality very much comes down to portfolio construction. So we make sure that the portfolio is long in individual securities, short in individual securities. So what we do is we go long stocks with characteristics that we think have positive expected returns, and then we'll go short those stocks that have a negative loading on those same characteristics. So take value as an example. We'll go long stocks with high true book to price, cheap stocks, and we'll go short expensive stocks. So how do we make sure that the beta is around 0? Now, in portfolio construction, we can force the portfolio to have a beta that's around 0, the expected beta. Of course, the expected beta is not always the realized beta. So if we look at very short-term betas, the product has a beta of between +0.5 and -0.5. So that's still not 0, but that's still pretty limited. The first one is we use a risk model where we calculate the expected risk of the portfolio and calibrate the portfolio according to that risk model. So we target the 10% volatility in real life, and again, in that historical simulation, the volatility of the product has been between 7 and 12%. So it will not be exactly 10% at each point in time, but that range is a very narrow range if you compare it, for example, with equities, where equity volatility can be anything between 8% and 45%. To me, having a systematic approach gives or should give a higher degree of confidence on the replicability of the returns we've generated. So this is very much it's a 100% systematic strategy. The returns we've generated over the life of the strategy, when we ran it in our UK vehicle, have been very much in line with what we've seen in those historical simulations. I think the investors in the UK fund tend to be very happy with it. That's also emphasized by the fact that we've not had any outflows from those existing investors. That fund has grown from 0 in 2015, where it was no money in it at all, to around in dollars about $1 billion US now, and that's all real client money. I think the BMO Market Neutral Fund is a very exciting product for the Canadian market, and we're confident that we can get the same success with it as we have had in the UK market, both in terms of asset growth as well as in the returns we've generated for our investors.